Hello once again, everybody. This is Rich with High Percent Trading. Thanks for joining us. This short video today is going to recap the pit open trading sessions that we've been following here at High Percent Trading in the three markets that we're following in the live markets analysis room: crude oil, Russell, and the NASDAQ. And as indicated, this I believe is the 43rd straight pit open session in a row that has been profitable. Trading this momentum-based approach using these indicators uh, called the accelerator. Uh, and the approach is the same. The rules are the same. Everything is the same for each one of these three markets. The only difference being the time. Let's take a look at crude oil. Now, crude oil trading the pit session is from 6 a.m. until 7 a.m. Pacific, and of course that's 9 a.m. till 10 a.m. Eastern. So at 6 a.m. we start looking for the appropriate trade signal as signified by the arrows. The first thing we do is we'll look to the left to see what has transpired since then, and notice that there were actually four arrow signals, all of them actually working out quite well. But because of what we call the two arrow rule, we've already had two in the same direction, even though we had another entry arrow here at around 6:02 a.m. This was in the same direction. Now, this was a profitable trade. Some traders do take these, but by and large, we don't follow that. That violated the two arrow rule, so there is no trade here. And as a matter of fact, the only trade that we got today in crude oil in the pit session was this short trade right here. That was about 47 minutes into the session. Crude today was very, very docile, was in a very controlled range for the first hour, which is usually not the case, and especially coming off of a holiday weekend like that, but that's what it was. It resulted in one trade. That trade was a short entry here. This trade was profitable. It did generate not only a scalp, but a small runner of between 12 to 16 ticks, depending on how you managed it. But that was it. That was the only trade. That brought us then out to 7 a.m. And there were no more trades after that following the pit open session, following the rules. But the good news is, even though it was one trade, that trade for the session was profitable. Now let's take a look at Russell. Now the Russell market was a little more active, provided some very nice trade setups. What we're looking at here in the equities is the pit open session is the first half hour of trading. And of course on Pacific time, that's from 6:30 to 7 a.m. Pacific. And if there is no major report that comes out at 7 a.m. Pacific, then that's when it stops. On those instances, we do have a major report at that time. We will extend that by 15 minutes. So at 6:30, this was our pit open. We looked to the left. We did see that there was one prior entry short that this indicator signaled, so we were okay to take another one in the same direction. And this indeed, this trade was a very nice trade here. Entering right around the 1204.50 level. Market went on to make a new low, not a new low on the session, but a new low on the move. And that was about 40 ticks overall if you held a runner. So that was the trade coming down through. And of course, keeping in conformity with the two arrow rule, we had arrow 1, arrow 2. We're not looking at taking any more short trade setups that were in here. Still moving within our time period here. The next trade was to the upside right here. Now that trade did not work out if you had a very tight stop. Notice if you had a stop with a close under this band, you would have been okay at the beginning. But most traders put a very tight stop in, so the trade entry here got stopped out. This is what was called the second bite out of the apple. Here, at least you were able to come back and get a scalp. So that was arrow 1, and then we had our second arrow set up here. Trade in here. Now, depending on where your scalp target was, if you had a relatively small scalp, you're able to get out, but your runner, of course, would not have. And if you had a little larger scalp, then this trade also, like the previous one, hit the stop, but then this is what's called the second bite out of the apple right here. just like this was. Second bite out of the apple, a nice trade, went up into this plateau. Very nice move to the upside, and that was about a 30 to 34 tick move to the upside on a runner. So that would have made a very nice trade. Now, notice we had 1, 2 arrows. This is arrow 3, arrow 4. We're basically ignoring those arrows with the 2-arrow rule. We're still good as far as our time is concerned. And so we're looking at taking a short trade entry here. It signaled a nice short trade. We came down into the plateau. Again, if you were to hold a runner and manage it through here, that resulted anywhere between 20 to 24 ticks on a runner, not including what the scalp is. And that brings us out to the termination of the time for the pit session. That takes us for our first half hour. So we had a short trade, a couple of long trade entries, and then another short trade. And now notice, when we talk about pit sessions being profitable, we're talking about the overall session on balance being profitable. It doesn't mean that every trade taken during the session is profitable, and point being, this long trade here would have gotten stopped out, but then your re-entry on the bite of the apple at least brought you back to even. This trade right here is your second trade, second arrow, resulting in a scalp but no runner, but then the second bite out of the apple puts you back in for a good trade. So you can see this trade for sure got stopped out. This trade might have got stopped out depending on what your stop was. And then of course this one was just off to the races to the downside. And then the earlier trade that we had, of course, was a nice big winner right here. So again, it's very important that you use relatively tight manageable stops. You don't want to be so tight that you're taking yourself out of trades, and we've talked about that in prior videos. But again, you can see this pit open session very nicely profitable in the Russell. Now let's look at our last one that we follow, and that's the NASDAQ. All right, here's our NASDAQ. Here's our pit open. Here's our 630 pit open right here. Now notice that the overall trend was up, but the real beauty of trading a momentum type approach like the accelerator uses here is it really doesn't care what the trend is at the moment. We're expecting good linear movement, so we're going to take advantage of that. So at 6:30, following the rules, we look back to the left, and we saw that we did have one prior short trade setup here, so we're cleared to go on the 2-arrow rule, and this indeed was your short trade right here, a really nice short trade that came down and made a couple series of lows down in here, a good nice runner. If you held and managed this runner and out in this area someplace down here, that was a good 36 to 40 ticks on a runner. Very nice profit. Again, following the 2-arrow rule, we're ignoring these trade entries here because they're in the same direction. Now, just like we showed in the Russell, about 12 minutes into the session, it took a long trade here, and that long trade got stopped out. Remember, not every trade is a winner, but what's important is you end the session a winner. This first trade got stopped out. This is also the second bite out of the apple and a second trade entry here on NASDAQ. This one went up, nice profit again. At least you got a very nice scalp out of it, and depending how you manage it, you could have gotten a runner anywhere from 18 to 20 or 22 ticks as we went up. And of course, we weren't done with the session. We're still looking at trading out the session in the first half hour. It then went to a short right here. Very nice trade to the downside on the short, getting a nice scalp, getting a nice runner. This was your second entry for the arrow, coming down very nicely. And then this is what I want to point out. Even though this is a third arrow, right, we will not take the trade based on this 2-arrow rule. However, what this also was a second bite out of the apple, because this was your initial trade entry. You got a nice scalp. If your stop on the runner was here, it's okay to put that runner back on when you take it out, as we did, and the first reversal bar back, which occurred right here, you're back on it again and went down and made new lows again, resulting in a similar type of profit. So there you have it. the 43rd consecutive pit open session in a row that's profitable in trading the crude, trading the Russell, trading the NASDAQ, just the way it's been drawn up and the way these indicators signal these trades for you. Again, thanks for watching. I hope this will help you in your trading. Please come away with the following a bit of information to kind of tuck away, and that is you don't want to overtrade. You don't want to keep coming back to the well. You want to get in, get out, get your profits. Remember, trading is not a marathon. And if you follow types of sets of rules that we have, one of those is the 2-arrow rule and the bite out of the apple, you will be profitable in almost every one of your trading sessions with a good indicator to signal your trade. So thanks again, everybody, for watching. Have a nice day. Bye now.